Hello, everyone. Chapter 2 here, cash flow. So what is a cash flow? What does that mean? What is that concept? What does that concept represent? The cash flow is simply the movement of cash in or out of a company, an account, or an investment, right? It's the movement of cash in and out, right, of a company, an investment, or an account. And the whole goal here is to manage that cash flow. So if your cash in is greater than the cash out, you're in good shape. And if the cash in is less than the cash out, then your company's going to have a problem. You might want to go and revisit your financials and see exactly what the problem is. Now, if your cash in is greater than your cash out, you'll be able to pay your employees on time, right? You'll be able to pay your creditors on time. Remember, the bank, you have to pay back the bank. And you'll be able to even pay yourself, right? Why I'm putting himself. You'll be able to pay yourself as the business operator, as the manager, as the owner, whatever you want to call it, right? So it's very important to manage your cash flow. It's very important to understand how the cash flows into your business. And it's very important to make sure that your cash in is always greater than the cash out. It does not make sense to run a business if from the beginning you know that you will be in that situation here, which is the second point of the slide. Okay, so what are the three main types of cash flows, right? What are the main types of cash flows? Give me a second. As I always said since video 1, it's taking me so much time to erase stuff from this. Okay, so three types of cash flows. Okay, and we'll review them right now. The first one is cash flow from operation, right? Cash flow from operation, also known as CFO on your cash flow statement. Cash flow from operation. Now, this is the cash received or spent from normal business activities. Okay, your cash flow from operation is your money received or spent from normal business activities. Okay, from normal business activities. That's the first category. That's your cash flow from operation. The second one is called cash flow from investment activities, from investing activities. Investing doesn't matter, activities. Okay, this is your cash. We'll use the same icon to make sure we're doing the same thing. So it's cash received or spent whoops, I'm sorry about that. It's cash received or spent, right, through investments. So if you purchase a new piece of equipment, if you purchased a new building, if you're building that new plant, that amount of money that you're spending in order to build the new building, purchase that piece of equipment, will be found in your cash flow from investing activities or investment activities. The third one is cash flow from financing. Okay, so when you are borrowing money to build that new building, the amount of money you pay in interest or the principal that you pay back to the bank will be found in your cash flow from investing activities. Okay, so this is basically your debt service, right? Your debt service will be your interest payment to the bank plus the principal, a portion of the principal that you repay to the bank on a yearly basis. So let me make sure I have you guys understand exactly the difference between your cash flow from investing activities and your cash flow from financing. Okay, so you want to build this new building, or you want to build this new plant, this new factory, and it's going to cost you $100 million. Okay, now that $100 million, of course, you're not going to take it from the operation of the business. You're not going to remove all that money from your cash. You're going to go to the bank and say, hey, Bank of America or UBS or whatever bank you decide to do business with. You tell them, listen, I need to build this new building. I need to borrow $100 million. Now, the bank goes, they do their due diligence. They look at your numbers. They look at your financial statements. They look at your income statement, cash flow statement, and balance sheet. And they say, okay, we'll let you borrow $100 million. And you need to let us know how construction will go, and so forth and so on. And they give you some conditions. Now, and they say every year, I'm giving you examples here, right? They say every year you'll pay us, $100,000 in interest, and you'll give us a portion of that 100 million. Sorry about that. Keeps on doing that on me. Okay. And you'll pay us $100,000 towards the principal until you pay back all the principal, right? So this is your interest, and this is your principal payment. Okay. That information, your debt service, the payment of that loan, will be found in your cash flow from financing activities. Okay, so this will be your interest payment and your principal payment. The bank says you will pay me $100,000 a year in interest, and you'll pay back that principal, and you'll pay $100,000 to go towards that principal until you pay the $100 million back. Okay, now, you as the business owner, you decide to build that building in 3 years. Let's say it's going to cost you, or let's use 5 years to build that facility, that plant. And every year you will spend $20 million, right? The first year you'll build stage 1, $20 million. Second year, stage 2, $20 million. Until the fifth year, you're going to be spending $100 million. Well, on this section, that's where you will find the CapEx. Right? That's where you will find the CapEx. CapEx is capital expenditure, meaning that any big expenses for buildings, for equipment, and so forth and so on. So in this section, year 1, you'll spend $20 million. Year 2, you'll spend another $20 million. Therefore, by year 2, in this category, you'll have $40 million listed, because you've invested $40 million by year 2, right? Year 3, you'll invest another $20 million. Therefore, at the end of year 3, you'll have $60 million sitting in this section. And by year 5, right, you'll have $100 million sitting here, because you're building that new building or that new plant that will cost you $100 million, and your plans are to build that over 5 years. And that's simply how you look at your cash flow. You have 3 sections: cash flow from operations, cash flow from investing activities, and cash flow from financing. Okay, as simple as that. Thank you.